All right, so Tuesday, markets close. What have we got? We've got the markets sideways, kind of still flagging bullish. Very impressive. Actually, we're going to take a look very quickly at some European markets just to compare because those have been flagging at their all-time highs. Some of them, like the DAX, have actually made new highs, just to put things in perspective. But aside the general markets, we have the dollar continuing its rally. So it's above 102, kind of near 102.5. Is it going to hit 103? Possible. Let's look at some FX later. We have interest rates going up. To be honest, I looked at the 30 year. The 30 year is pretty impressive. That's, to be honest, just from what the 30 year is doing, it looks like they all want to make new highs. And if the yields make new highs, which I think they'll do, bonds collapse. Yeah, something's going to have to break there. I mean, the banks, not just the banks, but corporate debt, everything is based on debt. So with yields going up, there's going to be trouble. So that remains the most important thing in my opinion. But yeah, yields up, dollar up together as usual. Commodities reversed, so that big pump yesterday is pretty much reversed, but some of the commodities are not they haven't lost their bullish flavor, let's say, like copper, uranium, oil. It's really gold and silver that got hit, but that's not bearish yet. That's just holding support. We'll obviously take a look at that. Anyway, let's take a look at the markets. S&P, I'll be very quick about this, just flagging sideways. This is not bearish, not bullish. It's kind of irrelevant day, just sideways day. So still looking for that possible breakout to all-time highs, testing old highs, let's say. Still has to clear this 462-ish zone, and it's old high, let's be honest, 460. So far just sideways. The Nasdaq sideways. You've got this ascending though. If you don't break out after a couple more days, you're going to start testing the ascending, and then you're going to have to go down. Same with the S&P. Let me just extend this. It's not too precise, but you know what I mean. And plus, we have some news coming out every day, so maybe that'll be the catalyst. The Dow Jones, though, look at this. That's bullish. Popped up, made a little new high there, closed at a new high. So looks like it wants to go a little higher. That delayed run to catch up with the others is still in play. It was the only green one. The Russell, it wasn't green, but look, that's hardly not bullish. I mean, okay, yesterday it closed at a very strong high, but look at that rally. Look at that beautiful hammer. So that looks like it really wants to go. So, but this is the market that has rallied the least. So look at the Russell versus the Dow. The Dow, the second laggard. So look at this. The Russell still has a bit of catching up to do, you can say. So that could easily break out a little higher slowly, nothing too explosive. So yeah, the markets are certainly still bullish, but sideways kind of day. Yeah, so let's actually, before I forget, look at the European markets though. Look at the DAX. Okay, it was a big red day, but that'll probably end up a bit green because US markets didn't do that bad. But you know what I mean? Look at that. Just the last couple of days, they made new highs. And the German economy is horrible, by the way. It's manufacturing. It's yeah, it's just funny how the stock market is pretty much the opposite of the economy, and that's just money printing, you can say. But they're raising rates also in Europe, so yeah, big divergence between the stock market and the economy. But look, the DAX made new highs, and I think I've said it for the whole time. The stock market going all the way up, especially in Europe, I think is a reflection of the inflation that will last in the future, that will persist. So FTSE, look, UK market, okay, not new highs, but still pretty high. The CAC, more like the DAX, almost at new highs. So when you look at the S&P, it's actually lagging the European markets. And when you look at the Russell, it really is, but still, hell of a rally. Okay, the banks, they're still going sideways after breaking out of this descending, at least the seniors. So again, it was just a sideways day. Look, you also have this ascending. So if it keeps going sideways and loses the ascending, we could go lower, but we're far from that for now. But still not a very explosive breakout. KBE, a little flush. I think this is following more the Russell, which was red, remember, but also that hammer. So it's holding this little sort of test of resistance. So it could go higher, but it needs the markets for that. KRE, same sort of pattern. So yeah, sideways days, sideways slash slightly down, but the markets are certainly not bearish, even in the short term, although I am fundamentally bearish. Okay, markets aside, let's look at interest rates, the most important thing. 1 year, it's always the same thing, sideways up. Today was a sideways up day, very muted. The 2 year, I think the most important one, I think that's going to make new, I think they're all going to make new highs, including the 1 year. But this one, yeah, little green day. So see how long it takes, but I think we'll make a new high. Let's see when it cracks 5% also. Close above 5% will be relevant. The 5 year, that one also, look at that strong bounce, just sideways up. That might take several days there to make new highs. 10 year, look at that, it's getting stronger now as you go further out. Look at that, that's almost closing above its 4.1%. Once you start closing up here, it takes 1 or 2 days to start testing the 4.3 range. And the 3rd year, even stronger than the 10. Look at that, made new highs. That's the one for me today that stole the show. So that's, for me, very significant. That kind of signals a run to the old high, 4.4-ish, 4.35, 4.4. So, okay, that's not going to go in 1 day, but for now, that suggests we want to run. And it was looking relatively weak a few weeks ago, let's say. So the 3rd year, very impressive. Look at the European yields. They keep wanting to make new highs. The British, very similar. So yields across the board in the West, just running for new highs. And the dollar, I have to zoom in a bit here. Look at that, it kept going. So, you know, yesterday we were looking at 102. It was a strong close, so suggested more continuation. We've got continuation today, almost touching 102.5. For me, resistance should be this descending. Let's see what happens. No point in guessing anything. Let's see what happens. Could go a little higher and hit 103, but you know, as long as it closes within this descending, it still should act as resistance, and then hopefully we roll over. We've got news coming up. Also, we should be still in a bearish downtrend, but to be honest, the bounce is pretty decent. And when I see this type of bounce in other, you know, in stocks, in whatever I'm looking at, you know, when it goes back down again, it tends to not flush a new low. So I'd expect, actually, if we do roll over, now that I'm thinking about it, that it finds some support at 100 and then tries again to break out of this descending, and then hopefully it flushes, actually, because I'm done with this excitement. I'd love it to flush, even though I have a lot of sidelines and I benefit from the dollar somewhat. But let's look at the FX before I forget. So the dollar going up, that would mean euro dollar down. But if we look at the euro dollar, you know, okay, obviously it can go down, anything can happen, but it did just recently break out of this little zone. But what would I say? Let's just really, I'm looking at it now for the first time. This is very short-term stuff. It's holding for now. This is actually not really relevant, I would say. Maybe short-term 108, the last low down here. And then it would probably, you know, if we do go there, it'd probably bounce a little bit, but then I don't know. Depends on news. ECB also, what are they going to do about their rates? So no point in looking at the technicals too much because of the news back and forth. But yeah, you know, the euro did just make a new high there. So I'm not sure if it's ready to flush too much down there. I mean, this entire zone between 105 and, yeah, I mean, 105, just a bit above 105 should hold. If once we close below 105 down here, then we're talking about a run back down to 1. I mean, I remember those days. But you know, we're not there yet. So let's see what happens. But euro dollar, time to pay attention to that one. Did just make a new high there though, so it should bounce a little bit. But again, the ECB will have news. Now, for me, the US dollar versus the Japanese yen. Now, this is strong. Okay, the BOJ has been playing around, and they got slightly embarrassed. And now, I mean, this is strong. You know, we had this breakout high, a bit like the euro versus the dollar. Then we came back down, bounced, and you can see why this is resistance here and support. So that's definitely a credible line to me. We bounce, come back down, test it, and then look at this strength. And now we're, you know, closing at the high of day. For me, that suggests the US dollar wants to go all the way up here, sideways, and actually higher. That's the problem I see. Like the yen is going to give the dollar strength here because the yen is so weak. I don't see this sort of chart, this pattern just going up here and then going back down again. It's just so strong on this bounce, like 1, 2, 3 days, closing at a high of day. Plus, it's backed by fundamental news. So, yeah, I do actually think that the dollar will go up a little bit more against the yen. Obviously, a bit of resistance up here, but I just don't see it rolling over, at least versus the yen. So let's see if the euro can be strong. And, this all translates to DXY. For me, the DXY is composed of the euro, the yen, and the pound mainly. I think I got that right. So the yen is helping the dollar. The euro, let's see. The pound, I haven't looked at this in a while, but I did have these trend lines. Look at this. We can see we've rallied. Remember that big flush down here, almost parity on the pound versus the dollar. Huge rally. Okay, kept on going, not bad. I thought it would fail actually up here, but kept going, a bit like the markets. But now look at this, you can see why we hit resistance. For me, that's definite resistance, this 130, just above 130. Okay, we've come off it a little bit, but now look, I think this is worth paying attention to too. Maybe we'll have a little bounce because it's come down quite a bit, maybe, but it could start to, once you close below 126, then I reckon you're in a bit of a downtrend. I mean, even just a little bit lower. So, but Bank of England, I think they have interest rate decision tomorrow or something. But sometimes news is priced in. So the chart, I always care more about the charts. But I think the pound should come down, actually. Just zoom out, shake your head. We've come all this way. What if we do rise a bit more? I think we have to come down a bit. So the pound down, that suggests the dollar up. Dollar against the yen, the dollar could go higher just from this strong bounce and what the BOJ did. The euro, to be honest, if the euro comes down, that also helps the dollar. And if it just goes up, I don't see it being that much stronger. Small bounce. I got to admit, the dollar has a few things going for it. And I really wanted to fail here, but just looking at the other currencies that make up the DXY, I'm not sure. What if we go higher? Then I have to look at this little target here. But the DXY should find resistance. Anyway, whatever. No point in looking at it too much. But, there's the DXY and there are the graphs of the currencies that make up the DXY. It'll be interesting. Obviously, there's news. There's the central bank decisions of the relative countries, currencies. So let's see what happens. But I'm paying more attention to the DXY and the currencies that make it up. So that's the dollar. Let's look at commodities. Spent a bit longer there on the DXY than I usually do. So copper came back down again. Okay, dollar was strong, commodities were weak, especially copper, a bit like the gold and silver, sometimes extra sensitive. So come back down, not at all bearish. I just think it will just, go back up, but let's see what happens to the dollar. Otherwise, this ascending, I don't think it's really that precise, but generally the ascending should hold. So if we come back down, strong support just below 3.8, I would say definitely this zone should be a buy, but copper looks good. I still think it should run to 4.2. Natural gas, the disappointment continues, still not breaking out, down 2%. It shouldn't really care about the dollar or interest rates, in my opinion, but just not up for the rally. Don't know why, can't explain it, but it's not really a dramatic day. It's sideways. It's not the best, though. 2% down is not great, but as long as it's not closing below 2.5, the trend is intact, although it is weak. Let's get rid of that prediction. Okay, oil. This is strong. I mean, look at that again, strong. I think 82, 83 is resistance, so I'm pretty surprised that it didn't have a red day today. Look at that, closed at a high of day. It's quite impressive. Very, very strong, actually. Let's see if we can close, not even 83, but 84 would really do it. But again, I think this is a bit of a sell zone in the short term. So, but very, very impressed. Again, probably the strongest currency in the last couple of weeks. Uranium also strong. Look at that. Look at that. Very strong day yesterday. Makes sense. Commodities did great. And then today again, not weak, you know, basically sideways and closing above this thereabouts, you know. So I think that's very strong, a bit like oil. So very impressed by uranium. It's really the metals, you know, copper, gold, and silver that didn't do so well today. And look at that, gold. I didn't expect it to go down after yesterday's great run. Plus, we were up yesterday, despite the dollar being up. But today, the dollar went higher and interest rates went up. I think that's the difference. And we got slammed back down again. So, but look, we didn't close below, in my opinion, what support is, which is 1940-ish. We got the horizontal. You can see why, you know, support here, resistance here, and then support again, but also the ascending. So for me, 1940 is support. I'll leave it there. So that's still intact, but not a great day. And if the dollar goes a little higher, then you're going to start close, you know, you're going to start hitting the 1930s, and then you're going to have to go double test 1900, unless there's some sharp reversal on the dollar or yields or whatever. Something can always happen, but you know, just imagine we fail here, then yeah, you're going to pretty much have to test the lower bound down here, 1900, and hopefully we get a strong bounce, you know, strong hammer, like really good stuff. And then you got this double bottom pattern forming, and then we go back up to test 1980, and then we'll see. But for now, it's still intact, just about hanging on. Silver also intact, strong. I mean, I don't want to say strong, it was down almost double, but you know, it's not like it's down at 23, which is kind of where gold is, relatively speaking. So silver's still finding support around 24, so intact. So let's see, right? Not gonna reiterate what I already have said. So intact, but definitely a weak day. GDX, not great, closed near low of day. I had this line here already. It's very, very weak support. I mean, it's not really easily forged support. I just sort of, I don't know why I placed it there actually, but makes sense. I mean, look, it's a lower close in the last couple of days, you know, but okay, it's this gap fill zone, but it did go below it. But anyway, we know where gold is. For me, gold is pretty much at support, just above support. So I guess you could say GDX is copying that, or at least you can create your own sort of support in GDX just a little bit below where it is to mimic 1940. GDXJ, same thing. Actually, GDXJ didn't close below its more recent low, so that's maybe not something to read into too much. But yeah, close at low of day. Not great, but look, as long as gold holds 1940, this shouldn't go much lower. And look where we were yesterday, you know, looking so bullish. So it really is wild swings. And for me, it's the dollar and interest rates. So let's see what happens. If we go lower, then honestly, the miners, the GDX and the GDXJ that look very, very much identical, they'll just follow gold, the chart pattern. So if gold starts to flush down here and test 1900, obviously GDX will go back to 29 and GDXJ will be 34-ish, which wouldn't be great, but you know, you can take advantage and buy some good seniors. Some, what is it, Goldfields and Anglo Gold got really crushed today. But anyway, you know, there are lots of good stocks out there, lots of good seniors. Finish with Bitcoin very quickly. It had a good day despite it being red. I mean, look at this. It flushed. I said it needed to flush. It touched this perfectly. That's nice to see. And then in the end, rally then from starting off as a bad day ends up being a good day, actually. So is that what it needed? A little flush, shake the leaf, and then rally back up? I don't know. I still think it could go lower, but I must admit that's a strong looking candle and the day is almost over. Okay, let's see. Not the best day for the metals and the miners, but exciting nonetheless. And really for me, interest rates still most important thing, and the dollar. So let's see what happens there. Yeah, have a good evening.